Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Wednesday, October 1st, so it is officially the start of a new month. We are doing the casual edition. My wife and I welcomed our second born late last week, so my schedule of sleep is thrown off a little bit. So we are doing the casual edition for the foreseeable future. It started off as kind of a ho-hum day, more of the same, some follow-through selling pressure following yesterday's weakness, but then kind of got a second wind here mid-afternoon on the back of some headlines. We'll get to that in a second. Before we get into the charts, I do want to remind you, if you have not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com. From there, you can select the markets that most interest you. I cover grains and livestock, and my colleagues cover precious metals, indices, energies, etc. So we've got a great team in-house that puts in a lot of hard work each and every morning to make sure that's delivered to your inbox first thing. We will be doing the charts on our Blue Line Edge trading platform, which is also available on a mobile platform. Very user-friendly, whether you're just charting or trading from it. It's a great tool to have in your pocket, no pun intended. Now that we got that plug out of the way, we can go ahead and take a look at some of these charts. If I can get these screens to work with me, we will start with the corn market. Coming into today's trade, it was really kind of do or die. We started rounding out over the last several sessions. As you can see, we marked lower highs here, and then we had lower lows and some follow-through pressure below the 50-day moving average today, which really kind of set the tone to start the month, saying, oh no, we're probably going to go back down towards $4, which is technically and psychologically significant. The good thing about the corn market, though, is that we do have robust demand, so we're not searching for demand. We've got good demand, and I would think that lower prices would only help spur that. Nonetheless, we were able to regain traction above the 50-day moving average on a closing basis, so very positive there. What we really need to see is some follow-through, get back above the 20-day moving average and yesterday's breakdown point. That's going to be about 420 to 422. If the bulls can achieve consecutive closes out above there, I wouldn't be surprised to see that continue momentum through the remainder of the week and hopefully into next week's trade. Soybeans, you saw a similar type of trade. This is where the news headline came into play, was a soybean market. You can see a big reversal here after trading to the lowest levels in about a month or so and finished back in positive territory, 10.15. That's very constructive. That's at the highest close in a couple of weeks. We've been treading water around 10.10, and it looked like we were destined to potentially test this trend line support or below that. Contract lows near 961, which goes back to last December. So we avoided catastrophe on that end. What was the headline there? Well, we got a headline from social media. We got a post from President Trump stating that they will have a meeting with President Xi in about 4 weeks, and the topic of discussion is going to be soybeans. So that prompted the buying. Whether or not anything comes of that, to be determined. I don't know that I'm going to be holding my breath here in the near term for anything to come of that or ahead of that announcement. But what it does do is kind of shifts the risk that something positive does happen. That is risk to the upside. So I think at the very least, this headline of soybeans being at basically front and center stage now for President Trump, I think will hopefully help establish some sort of a floor near that psychologically significant $10 level. And then if we were able to get more positive news, potentially you could see this market get back above that cluster of major moving averages, which comes in the mid 1020s. From there, things potentially get a little bit more interesting. So that's kind of what we're looking at. As far as the other markets, crude oil, we'll touch on that real quick. I think I've got a minute or so. Very interesting. A lot of weakness here in the last couple of sessions, but we're at an inflection point, which I think represents a pretty good risk-reward area. We've got the November daily crude contract pulled up here, and as you can see, 61 to 62, that has been a very, very strong floor basically since the middle of summer. We need to hold that. I'm fairly optimistic that we can. From a risk-reward perspective, I like looking at the long side here with a bullish bias. A break and close below that, obviously it neutralizes that, potentially opens the door for more downward pressure. But might be worth taking a look at if you like the energy markets. Precious metals also been on a move. A lot going on there. My colleague Phil Strebel does the Metals Minute each and every morning. I'm sure you're up to date with that, so I don't want to steal his thunder. I'll leave him in charge of that. If you have any questions at all, don't hesitate to reach out. BlueLineFutures.com. Again, sign up for a free trial of your daily commodity commentary. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.